Hey everyone, it's Peter here. Thanks for coming back to the PIMD podcast. Today we're diving into a question that I get all the time. It's this: should I focus on paying off my debt first, or should I start investing instead? You might have thought this before. I've thought this before. It's a huge decision for physicians and high income earners, especially because we're often balancing like six-figure student loans, mortgages, and everything else we got to pay for, while we're also thinking about building wealth for the future. And there's no one size fits all answer, but today I'm going to walk you through how to think about it clearly and confidently. I think that's the most important thing. So stay tuned. Welcome to the Passive Income MD podcast, where we talk about creating your ideal life through multiple streams of income. If you enjoy hearing about this stuff, make sure to hit subscribe. Now let's get on with the show. Hey everyone, again, hope you've had another amazing week. This week, I've had a few people come up to me and tell me that they listen to the podcast, and I want to let you know that means a lot to me. Again, it doesn't happen often where I'm stopped in public or whatever, but every once in a while when I'm at a conference, when I'm at the airport, or even when I'm at my own school, dropping off my kid. Thank you for doing that. It means a lot because sometimes you're talking into this world and you don't even know if anybody's listening. So knowing that it brings value to you, it means a lot to me, and it'll definitely keep me motivated to keep going. So this week, again, we're talking about a topic that, again, I think all of us have thought about at some point. If you're like most doctors, you're like me, you didn't start your career debt-free, even though that would be really nice. We have med school, you've got residency, you got life, all of that stuff, and it all adds up. And then when you start finally earning that attending salary, whether you're employed, whether you're starting your own practice, it's tempting to either just pay off all your debt with everything you've got, or you immediately start investing everything you have to catch up with other people, your other friends who have been doing this for a while. And here's the thing: the longer you delay investing, the more you lose out on this thing called compounding. And we all know that compounding over time is like that amazing force that increases your earnings, increases your return on investments, increases the size of your net worth, but it needs time to do that. If you ever looked at a compounding chart before, it's amazing to see that the growth of that curve really happens in like the later years. If you look at someone like Warren Buffett's wealth over time, you'd be surprised, even though he's 80 years old or whatever he is, most of it happened just in the last decade. But at the same time, debt and having that debt payment, it's a guaranteed drag on your finances. So you want to be able to make the right call early, because if you don't, it can really change your financial trajectory. So let's start out with why you might want to prioritize paying off debt. I mean, wherever you're at in the game, whatever stage you're at, you probably still have some debt and you have this desire to invest. And this is why you might want to prioritize paying off debt. Number one, it's because it's a guaranteed return. That's one way to think about it. If you pay off a loan with, let's say, 7% interest rate, and that's what it's sitting at, that's like getting a 7% risk-free return on your money in so many ways. Like, try finding that type of guarantee in the investment market today, especially with everything being so volatile. Second is for the mental freedom. And this is something I've learned even later on in life. There's something powerful about reducing your debt. In fact, being debt-free. When you talk to people that are completely debt-free by choice, it's amazing what not having that payments hanging over your head can make you feel like. It can take away a lot of financial stress and create more flexibility in your life. And for some, that peace of mind, it's worth way more than some sort of theoretical investment return that could happen. And lastly, it can create more cash flow for you. Like when you eliminate debt payments, you actually free up monthly cash so that you can put towards investing later on. And that can potentially accelerate your wealth building even faster if you can get that cash flow going faster towards your investments. So here's some scenarios where it might make sense to prioritize debt payoffs. Like if your loans are especially high interest loans, and what do I mean by that is like something that's probably over 6 or 7% is considered higher, especially if it's credit card debt. If you have credit card debt that's sitting in the 20% plus range, that's a no-brainer. If carrying debt also causes you major anxiety, like you think about it all the time, it keeps you up at night, that might be a reason for you to prioritize paying off your debt sooner than later. Or honestly, if you value that freedom of just not having debt payments over your head, and if that's more important to you than maximizing returns, go for it. Prioritize debt payoff. Now let's flip it, right? Why might it be smarter to invest instead? First, higher potential returns. You all know this. Over the long term, whether you're investing in the stock market or you're investing in real estate, these returns are anywhere from 7 to 10 to 15% annually. And when it comes to real estate, you know that it's not just about appreciation and increase in value. It's all about the cash flow and the tax benefits that come from that as well. So if your loan interest rates are relatively low, let's say around 3 or 4%, then your money could definitely be working harder for you somewhere else. Second is compounding time, meaning that the earlier you start investing, the more you benefit from the magic of compounding. We know that compound interest increases and gets faster and accelerates the longer you're in the game. I mean, even small amounts invested early can grow into serious wealth later. I mean, I encourage you to look at it, but there's all of these statistics and comparisons where you have two people, one person invested very, very early on, one time, a small amount, and somebody later on in their life was, invested a significant amount of money regularly. And the person who just started earlier has actually a lot more at the end of the day. It's always like this surprise gotcha type exercise. And you realize time makes a difference when it comes to compounding. Third, the reason why you might want to prioritize investing is for the opportunity cost. Like every dollar that you aggressively pay off low interest debt with, it's a dollar that, again, you don't invest. It's not growing. It's the safe move, but sometimes it's not the smartest move long term. So when should you maybe lean a little bit more towards investing, especially when your debt has low fixed rates, like certain mortgages? Like how many of you actually have a mortgage that's below 3%? You got it and you refied at the great time. Good for you. That's probably something you don't want to pay off sooner rather than later, especially if you can use that money towards something else. Maybe you have student loans that you refinance and you got a really, really low interest rate. I did myself, and I got really lucky at the time when I graduated med school. We were able to refi and consolidate, and I got an interest rate below 2%. So I'm paying that off as slowly as possible and using that money, and I'd rather use it somewhere else to actually grow it. Maybe you have a really stable income. You have a strong emergency savings fund that's already there, and you've got this really, really consistent income. So maybe you can feel confident that you can pay off the debt. So you can pay off your debt payments at their normal rate and then really, really push it towards investing. And when you're really focused on long-term wealth and growth, and that's ultra important for you, then you might want to prioritize investing first. So how do you decide on this? Like, how do you decide what's right for you? And I think there are 3 questions that you need to ask yourself. Like, what's the math telling you? That's number 1. Compare your interest rates to your expected investment returns. We talked about if your interest rates are higher, then you need more of a spread. Then you need higher returns to justify not paying off that debt. For example, if your debt is somewhere in the 6, 7, 8% range, and you expect to make 7 or 8% somewhere else, it'd be safer in a lot of ways to pay off that debt and it's guaranteed returns on that. But if your loan rates are low, again, below 4%, maybe investing might win in terms of numbers. Number 2, what's your risk tolerance? I mean, some people hate having debt. They can't stand it, even if it's low interest debt. So if it's keeping you up at night, prioritize paying it off. Like when we talk about financial freedom, it's not just about the math. Financial freedom has a lot to do with what's going on upstairs, right? In your mind. I have a buddy who had several $100,000 of debt and he got a signing bonus at work and he just couldn't take it, even though that interest rate was sitting there at a very, very low 2% interest rate. And so many of us would be like, don't pay it off. Don't prioritize that. But he couldn't take it anymore. He just paid it off. And guess what? He hasn't thought again about it. Then again, he also hasn't built up his investments probably like some of us have. So it goes both ways. Hey everyone, this is Peter Kim. I've got some exciting news for those of you thinking about taking your career beyond clinical medicine. PIMD Con 2025 is officially happening this September 25th through 27th in Newport Beach, California. Now, this isn't your typical conference. It's designed specifically for physicians like you, those who are exploring side hustles, thinking about starting a business, or wanting to learn how to invest in passive real estate. Now, at PIMD Con, you'll hear from top experts, investors, and entrepreneurs who've been in your shoes and are ready to share what works. Now, we built this event with you in mind, with tailored tracks focusing on real estate investing as well as entrepreneurship. So whether you're just starting out or looking to scale, there's something here for you. And if you can't join us in person, we've made it easy for you to participate virtually from anywhere. Now, if you've been thinking about creating more freedom in your life, financially or professionally or time, now this is your chance to take the next step. So head over to PIMDcon.com to grab your ticket. I hope to see you in Newport Beach. It's going to be an incredible weekend of learning, connection, and inspiration. And number three, you got to know, what are your short and long-term goals? Like, are you trying to retire early? Are you trying to start a side business? Do you need that cash right away? Are you trying to go part-time at work? Is that investment, that cash flow? Are you trying to build it up as soon and as fast as possible? Your goals, and knowing that should really guide your strategy. So let's remember, it's not just a numbers game. It's really a life decision when you go and decide to prioritize one side or the other. Now, here's the good news. You don't have to choose just one. And most physicians that are in our community, they choose some sort of hybrid approach. They understand that debt is not always bad. Debt can be used to your advantage. Some of these things are good debt. And if you can use that to build your wealth, build your investments, build your cash flow, that can be a good thing. So what people do with this hybrid approach is that they'll prioritize high interest rate debt, like credit cards. If you got any private loans out there, which are sitting in the teens or even the 20% interest rates, I mean, it's a no-brainer that those should be prioritized and paid off first. What years ago, a long time ago, when I would hold credit card debt, and that would happen, I would get stressed about it. But when I learned to pay it off every single month, it completely changed my life. In addition, many people will actually invest a portion of their income, and they'll make minimum payments on low interest debt as well, just to make sure that's paid. But then they'll have a certain amount that they know is going to go towards investment regularly and consistently. So for example, you could allocate like 50% of your surplus income to debt payoff and 50% to investing. And if you can adjust as your situation changes, but that way you feel balanced. You can feel like you have some psychological wins and you can have growth at the same time. Again, it doesn't have to be either or, it can be both. It can be both of those things. So before we wrap up, I want to make sure you grab a resource I created just for this topic. It's called Pay Off Debt or Invest First, the 5-minute cheat sheet for doctors. It's a free summary of everything we've talked about today, the pros and cons, key questions to ask yourself. It's really simple and easy, but just summarizes there in one sheet for you. And even the hybrid formula, which we talked about, that I personally use, that I personally use to create financial freedom for myself. You can find the link in the show notes or in this week's blog post at passiveincomemd.com. It's free again, super simple, and gives you a clear starting point. So definitely check that out. So, all right, let's wrap this up. At the end of the day, right, again, if I have to summarize, if you're carrying high interest rate debt, pay it down aggressively. If you have low interest rate debt, pay the minimums and start investing early and let your money grow. And if you're somewhere in the middle, find a hybrid plan, something that works in terms of balance for you, that fit within your numbers and make you feel good at the end of the day, and something you can sleep with. Again, there's no perfect path, but the worst thing you can do is stay stuck like in the middle, doing nothing and just holding onto that cash, not knowing what to do with it. Now, if you've been thinking this question, I hope this episode has helped you in some way. I'd love to hear from you. You can always reach out to us by emailing us or one of our social media channels, or especially on Facebook or one of our communities. Again, I appreciate you. Until next time, keep taking those steps to make progress on living your best life. I appreciate you all. Have an amazing week, and let's talk again soon. Enjoy the show? Let me know by dropping a review in the podcast app you're listening to us in. And if you haven't already, make sure to hit subscribe. Join thousands of physicians who are also on this journey to creating their ideal lives through multiple streams of income. Learn more at our website, passiveincomemd.com. Thanks again for allowing me to be a part of your journey. See you next time.